Hi, I'm Bernd Nussbaumer from macrobeat.co.uk. Well, a lot has happened in the back end of last week and during this week, centering all around Mr. Trump in most cases, really. From testing positive on COVID, the market that sold off on the news. Then on the flip side, right on the weekend, Mr. Trump really responding well to the treatment and already sort of coming out of hospital before the market really had a chance to have another sell-off, given that he was admitted to hospital. The other sort of thing has been during the week where Mr. Trump tweeted an end to the stimulus talks, which has seen another market sell-off, just to be followed by talks on the next day that there might still be a stimulus. So it's really just a messy flip-flop market, not really much that to sort of put our teeth in. And what I sort of feel is that we now getting into this sort of moment ahead of the US election where maybe emotions in the market will be the driver rather than macro fundamentals. The market at some point in time will now have to decide what kind of risk are they willing to run into the election. The polls obviously still favoring Mr. Biden strongly, but we know all about polls that they haven't really been that accurate. So the market may just have to figure out what this is going to be, whether we even know of a winner past November the 3rd, or if it's going to be something for the Supreme Court. So really, the market is now going to be driven by emotions in due course. That's what we're really seeing. The other thing that I will quickly mention, which I have a slide as well for it, is still all the talk around Federal Reserve or general central banks. And I would just still make the case that the Federal Reserve, as well as other central banks, have come to the end of the road, really. Yes, they can do a bit more QE or do whatever, but reality is if you want to help Main Street, and that's where the help is really needed the most, fiscal help is the only thing that is really now the key. And I think going forward, rather than focusing on central banks, we should start to focus on fiscal side in various countries and see whether there is a divergence opening up in terms of which country has done a good job, which one hasn't. Because from an interest rate perspective, obviously with global rates at zero, there will just be no divergence in the foreign exchange market. So fiscal side is what we're going to be focusing on going forward, in my opinion. The first slide is, as I mentioned, this is just really a summary of a few Federal Reserve headlines of the last sort of 2 weeks. And if you see, every member really has one word in every speech they have, which is fiscal policy. To me, something I haven't really seen in my career that way. So the Fed is definitely shouting for help in terms of asking the government to push through another fiscal stimulus package to help the economy. On the next slide, we see euro dollar has been consolidated now for the last 2 months, and just sort of in the last 1 or 2 days, we have seen the euro starting to push higher again, the dollar looking rather a little bit on the weak side. And if we sort of confirm this break above 118.15 area, we could actually see another push higher in the euro dollar. The next slide is the dollar index, same here. We had this sort of dollar squeeze that took us up to 94.65, but in recent sort of week and a half, we see just the dollar just starts to sort of leak again. This area here, 93.30.40, is very critical. If we break below here today or close below here today, could really see another push lower back to 92.55, as low as 91.90 if need be. The next chart is probably an interesting one, dollar CNH. That one has moved down 7.5% since June. Dollar CNH move of this week is in particular responsible for the broad dollar weakness. And really what we see there is with 10-year China government bonds at a 3.2% yield, together with a sound economy, maybe we have a new sort of carry currency out there, which maybe the market didn't really expect to see. But with the big impact the dollar CNH rate has in a correlation sense, this is really what pushed the euro dollar back up, and more dollar weakness here would actually see more broad dollar weakness elsewhere. Last but not least, gold testing the 1912 key level. That is the sort of downtrend from 2020 highs. A break here would actually confirm probably the dollar downside as well. This is really it for me for today. Thank you very much indeed. Thank you. Bye-bye.